Hey guys, this is Market Update. I think the outlook for Bitcoin and crypto over the next few months is okay. We've had a lot of issues resolved positively. Firstly, CPI came in below consensus. That's good news. So that means the Fed can cut by 25 basis points, and they are putting out into the media that they want to cut QT as well. So they want to end that. I think that's fairly positive overall. You've got the trade deal here, which is working out, right? They're not getting more aggressive. It looks like they just want to make this deal work. And look, there'll be some positives and negatives, but that uncertainty is probably going to be laid to bed. And that means that the world economy can move forward. Bitcoin now tracks the world economy in TradFi. Right? We've gone from early adopters now to the early majority. You can see that very, very clearly. The huge distribution here around this 100K level, as much as 20 to 25% of the network has rotated hands, right? Very different to previous bull markets. This is the Wild West before. Huge differences in realized price during bull markets. Look how slow and steady the realized price has just moved up here. Just a very, very different type of bull market. Real sustained capital inflows. And that's changing the price right now. And I know there's a lot of sellers because the 4-year cycle should come to an end right now. All of that stuff is going to get less and less important as more and more TradFi money buys Bitcoin. They don't care about 4-year cycles, right? They're actually investing for long-term time horizons, and it's a lot more money to come into this network, right? You can put trillions upon trillions of dollars into this network from TradFi. You know, sovereign wealth funds, they're not looking at 4-year cycles, right? They're mining, they're buying it, right? They're accumulating. And so, yes, you can get volatility in the price, but it's just different. And why would they stop buying because of the 4-year cycle? They're going to stop buying when credit gets tight. But if the Fed are cutting interest rates, trying to be more dovish, credit's not going to get more tight. It's actually going to increase, which is actually good news. So I think for the most part, if you want a 20% discount to the crypto course, just type BTC at checkout. It expires in November. You get 300 videos here. I update it for free forever for existing users. You can see here. And then how to invest, how to set up your portfolio, how to trade and everything else. You can check that out via the link below. The US government is still shut down. This is important for our bags. It's the most important market in the world and everything's priced in dollars. So this is what we have to focus on. There's two things here. So the first is the data isn't getting produced. I don't think that's a big deal because if you look at actual real-time analytics from Trueflation actually leads the government data, and I think it's more accurate anyway. So you're looking at around 2% for inflation. It's not that big of a deal. That's the CPI. I know the Fed looks at PCE, but it's a good indicator here, and it leads the BLS data, right? And so it's showing that inflation isn't really a massive deal. The Fed, they're going to look through it anyway, right? The second thing is a shutdown can and probably will negatively affect GDP and inflation. And the Fed know that as well, right? When you get shutdowns, it can negatively affect the economy. And so ironically, what we want for a longer cycle for Bitcoin to keep rising is the Fed to have more cover to cut interest rates and to be more dovish. If the Fed do that, liquidity can just find its way into markets and then prices do okay for us. So I think, ironically, it's not great at the time, but this may lead to that longer cycle because we're just waiting and waiting and waiting. If the data comes a little bit softer, then when this is resolved, presumably after the New York mayor's race or something like that, it will get resolved at some point, and then you can go on again. And if data has been coming softer, it just means the Fed can do more on the other side. So we can look through that. We look at this as well. Everyone's saying we're in a bubble, right? It's a huge bubble and assets are at all-time highs. So a bubble would suggest that prices are massively high in relation to the fundamentals. That's not what is occurring though. I don't see a bubble here. With 17% of companies reported, operating earnings are expected to hit another record high, up 10% over the last year. If you look at this, 69% of S&P index members have reported earnings so far that have beat expectations. Earnings beating expectations isn't a bubble. A bubble is when the stock market or other prices are massively detached from the fundamentals, but the fundamentals are very strong. So this is what we want, right? Fundamentals are strong, earnings are strong, and we want the Fed to come more dovish. That's a bull market, right? That's the macro that can help us get out of this 100K purgatory for Bitcoin. The best trade this year, without a doubt, has been gold. If you bought something on January 1st to outperform and sell now, then you're looking at gold outperforming Bitcoin and the NASDAQ. But that's not really the game in risk assets, right? Now, trading's different, but if you're actually buying one of these assets for an investment time horizon, at least 5 years, let's say 10 years, Bitcoin has the outperformance. 1 year, even on a 1-year chart. So just add a couple of months in, Bitcoin is still outperformed. 5 year, Bitcoin is outperformed. It's not even close. So which one of these assets do you want to buy to take out in 10 years? Bitcoin. Even tiny differences in the annual rate of return of these assets makes massive differences over time. So let's say the NASDAQ does 18% a year for the next decade. It's done 18% a year for the last decade. So let's say it continues that growth at 18% for the next 10 years. Let's say Bitcoin does 25%. Right now it's been doing 50 over the last few years. It's been 100 before. Just cut it to 25%. Over a 10-year period, it's almost a doubling of your investment assets. So if you put $1 in the NASDAQ at 18% ARR, over 10 years, that's around a 5x. So $1 into $5. If you put that dollar into Bitcoin over 10 years and it does 25%, you're looking at almost a 9 or just over a 9x, right? So you're looking at a huge difference, even though the yearly ARRs may be similar, seem similar, 18, 25%. If Bitcoin does a 30%, it goes higher even. So I think Bitcoin has the outperformance. JP Morgan, Jamie Dimon hates Bitcoin. Anyone that trades Bitcoin is going to get sacked. I don't believe in it. It's a joke. It's a scam. Oh, but by the way, we've just added Bitcoin collateral for institutional clients because the market wants it. It's proliferating because it is the best collateral. It's the best capital. And so it has the outsized growth. I think buying Bitcoin now is going to outperform both of these other assets and most other assets over the next decade in terms of the size and the risk-adjusted return. If you want a 20% discount for the course, expires this month or next month, type BTC at checkout. You get everything for free forever. And also the Bybit deposit bonus if you trade Bitcoin and crypto will be down in the description as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you the next one.